right now, the floor of the Nigerian Exchange resumes transactions following the two-day Eid celebration holidays, with now market operations resuming after Tuesday and Wednesday as off days. Now, on Monday, investors in the equities market gained about 3 billion naira as the market capitalization rose to 19.77 trillion naira, while the Nigerian Exchange All-Share Index increased by 0.01% to hit that 7,952.65 basis points. Now, the premium index lost 0.68 basis points, reflecting losses from all Tier 1 banks listed on the index. Etena PLC led the gainers chart with a 10% increase in its share price, closing at 7 naira 15 kobo. It was also followed closely by University Press PLC, which rose 9.93% to close at 1.55 per share, 1 naira 55 kobo per share, and Qtex PLC, Regency Alliance Insurance PLC, as well as Learn Africa PLC were also on the list of the top 5 gainers, as they gained 9.92%, 8.89% and 7.76% respectively. Joining me now via Skype to discuss this and much more as the market resumes transactions today, I have Vincent Oshoma, a stockbroker. Good to have you on the breakfast show this morning.
Good morning. It's my pleasure to be
now, Vincent, let's start off now what we should expect in terms of market transactions, the volume of transactions, the value, and the activities just in general as we resume transactions today following the two-day holiday. That's quite a long time in the stock market, wouldn't you say?
Yes, 2 days is quite a long time because we have about 5 days, 5 trading days in a week. So 2 days, that's removing more than 40% from the trading day for that week. So I'm looking at the remaining days for the week. We expect it to be upbeat because we are approaching the end of the month of July, where most listed companies are expected to release their half-year performance. So we expect the release of these results to affect market performance as investors start taking position, especially in companies that they expect to do well with their performance. And also remember that some companies will also be declaring dividends as they release their results to the market, interim dividend.
Let's now talk about the subsectors. Let's look at banking, oil and gas, insurance. Also looking at the commodity market, what sort of performance do you think, if we try to play pundit? Yes, we cannot say for certain where the pendulum will swing, but looking at transactions we had on Monday and in just recent past or even last week, what do you think will be playing out within the subsectors?
Yes, the banking sector, which is a subset of the financial services sector, is a major part of the market, and it drives the major transaction in the market. And like you could have seen in the past, the Tier 1 banks, they actually drive the performance in that sector. And if you're looking at what we expect from them, from the Tier 1 banks, I would think that they will continue to dominate that space, and a lot of persons have faith in the Tier 1 banks to keep taking position in them, especially if you're talking of interim dividend. Most of the interim dividend will be coming from the Tier 1 banks. So I think they will continue to drive performance in the space. The insurance sector, we know that the insurance sector is going through recapitalization, and that's one of the things that is attracting interest in that sector. So we'll continue to see the result of the capitalization as companies continue to announce their recapitalization plans and implementation of their plans. We'll continue to see drive performance in that sector. Why the consumer goods space is seriously challenged, because looking at what is happening in the macroeconomic space, but some companies there, they have been able to do some work of backward integration and be able to weather the storm in terms of the challenges, the macroeconomic headwinds that is affecting that space.
Do you think we'll see a major change in terms of the top gainers and top losers that we had from Monday, somewhat replicate the same pattern as we resume transactions today?
Yes, we should see some changes depending on the companies that release their results, because one thing that we expect to drive performance in this season is the half-year result, each result being released to the company on the market. So once we see good results, we expect it to drive performance. So it depends on when those companies release it, because they have till 31st of July to release the half-year results. So if you will see the result coming in today, tomorrow, we expect it to drive performance and also affect the sectors which those results have been released.
And investors are looking for havens. Everyone wants a safe place to have their investments. Now, let's talk about the havens that we have, the opportunities. Looking at, even within the commodities market, gold is still pulling quite strongly at this point in time. What do you think, or where are the sentiments driving towards? We know the back and forth in terms of the treasury and bonds, treasury bills and bonds market as well. We know the reception within that space as well. Where are investors within the second half of this year, especially local participants, putting their money?
Yeah, for the first half of this year, we saw a lot of movement, reallocation of assets to the fixed income sector. Remember that for H2 last year, the equity markets, there was a lot of interest and a lot of movement into the equity markets, which made markets to close as the best performing in the world, and market to close the best performing in the world. And it continued in January. But from February, we saw an uptick in the yields in the fixed income space, and a lot of persons started moving to that space. And that's why there have been a lot of interest. If you look at it now, compared to what we have last year, the yields in the fixed income space have actually increased. So we have seen a lot of reallocation of assets, people trying to keep it safe with the fixed income space, in the fixed income space. But with the expected results that is being expected in the market, and also the expectation of an interim dividend, we should see some realignment of assets into equity as people take position to take advantage of the result that will be released in the market, especially for companies that will expect to release interim dividend. Because one thing about our market, the dividend is a major driver for most investors. Another thing is that because of what is happening in the forex market, some persons are moving to dollar-denominated investment.
Exactly.
Because they feel at least to maintain the value of their investment. So we have also seen people going into that area. People are going to see interest in that space as well. But in the long run, the main thing is that they will see those fixed income space have been gaining, the foreign investment, dollar-denominated investment have been gaining, but we'll see some traction, expect some traction in equities because of the expected results.
And our performance in terms of pricing of our commodities, what would you say is also the pattern?
Yeah, for the stock market, we have not seen real impact or in terms of the commodity trade, but we have seen uptake because in terms of commodity trading generally, because you are saying as the world increased vaccination and also increased the reopening of major economies. So the appetite for commodities have actually increased as more countries reopen, and that's what we have seen affect the price of oil, which is one of the major commodities that is affecting the Nigerian market. So because of the reopening of the economy and increased vaccination, we have seen an uptick in prices in that space.
And globally, we are seeing quite an increase in case of the Delta variant of the COVID-19. To what extent do you think this might likely tilt a movement on track at this point in time for the second half of this year? I said last year, the exchange, the NSE, I said then, pulled quite bullish. And by the first quarter of this year, it was still trying to sustain, but had made some major losses. The second quarter was an upbeat and low momentum. What do you think would also play out as well now with the Delta variant being announced and surging cases? We might not necessarily have restrictions or lockdowns, but how do you think this is going to tilt this, especially from shocks from external factors?
Yeah, it's definitely going to affect things because the Delta variant is affecting the quick reopening of major economies and as projected initially. So, but with the increased vaccination, and we don't, like you said, we don't expect to see major lockdowns like we experienced last year. So it will not have major impact like we saw last year, but it's definitely going to affect how things turn out. But I think the major thing is with the increased vaccination and also as more countries trying to look at way of taking care, because now people are not opening their economies like they expected fully. We still have some level of restrictions in some area with marks. I think this will help in controlling the trend and also the help in moving things forward. But definitely going to affect the reopening of economies, which will affect performance generally.
Thank you very much for your time on the Breakfast Show this morning, Vincent Oshoma. It's been a pleasure speaking with you, and then we keep our fingers crossed whether or not the market will close positive or negative today. Thank you once again.
You're welcome. Thanks for having me.